Yo, what's good, troop? The highly anticipated time frame alignment video. This video is going to be mainly about teaching you how to use multiple time frames to analyze which sweep of liquidity is going to be the valid sweep of liquidity to exit on. Fucking camera. There is no way. I just click record. Ooh. Lock in, little bro. Thank you. We've got our monster. Let me know what you're sipping on. We got it in the wine glass because we're like that. We're moving different now, okay? Miami X Macri, we're moving differently. We don't have time for the simple tin cans anymore. Okay? What are we sipping on, boys? Anyways, oh, man, it feels so good to be back. We're in our prime. We're so back now. Okay, let's talk about it, boys. How to identify, using multiple time frames, which sweep is going to be the sweep necessary to create an opposite implied move. If you're in an implied move, how do we know what sweep or which draw of liquidity that we trade into is going to be the one that stops the trade, right? Second of all, how do we verify using multiple time frames which pointer is valid, right? Because I see a lot of people taking 3-minute pointers that at the end of the day are sweeping out liquidity, right? You never want to take a pointer that is adding speculation to the market. When you buy side sweep and you have a pointer that defeats the entire model, okay? You cannot enter on a trade like that no matter what. Okay, we have 3 trades. These were taken with me and my mentees today, so we've taken these on calls. These are 3 trades that we took. Obviously, only AM and PM moves. That's the only sessions that I trade and my students will typically trade. So that's what we're going to focus on. The first trade is very standard. Okay, we have an SMT between NQ and ES at the London High. At the London High. We take our London High on NQ, and then we react to an FFEG on NQ. We actually took the trade on NQ and then correlated it with ES because it was the same trade. I'll show it to you on NQ because this is what we took. We were reacting to a set of FFEGs way back here in this range. I've disabled them now because we've mitigated the range. But you'll see we took out our London high, we took out our London draw, respected the inefficiencies in ES, and then pulled underneath of that. Okay? Now, what would your targets be in a situation like this? Well, we have high-res lows, right? We've got a high-res low here. We've got a high-res low here. We've got a high-res low here, 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 and here. Why was that we exited right here? Well, you'll notice that any of these high-res lows could have been enough to pull us forward, right? They're adding to the draw. Either buyers are getting in or sellers are getting out at each one of these high-res sources of liquidity in this context, right? That's what would cause this next move, which we didn't take it on NQ. We took it on ES, okay? So we swept out the London low, which is a huge draw. But guys, the session lows and highs are just high-res highs and lows. They're just the outermost regions. Any of these are enough to send price. We had another SMT, I think, okay, between NQ and ES, I believe. No. We took the London low. But the London low on ES was not enough, right? Was not enough to send the market flying back up. High-res highs and lows are session highs and lows, except the session highs and lows are typically the outermost range. But it just depends on how you classify the session high or low. With the London moves that we have it outlined starting at 3 a.m., but this is still valid. This is still valid. And matter of fact, this is the sweep right here that realistically caused this move. But the correlation between NQ with the sweep of the London low is also important. This London low necessarily didn't do a whole lot, right? This sell side sweep in London low didn't do anything. And matter of fact, it took us to come all the way down here to sweep out this high-res source of liquidity. You can see there's the sweep. That was really what caused the move. Now, sure, the London definitely did contribute to that, but it was mainly the fact that they were correlated. But how could we tell that it wasn't going to be this guy? This is where the skill of time frame alignment comes in, determining which sweep is going to be the sweep necessary to send you back flying forward, and also which pointer is valid to take using multiple time frames, right? That's the idea. Now, this requires knowledge on first fair value gaps. You have to understand how a first fair value gap works, okay? In the pursuit of creating a small time frame inefficiency, here's a little 1 minute inefficiency. Imagine this is a little pocket, right? You got a problem. Let's say you've been shot, okay? You got a bullet hole in you. So you got to go find a way to repair that. Maybe you try to get a bandage. So in the pursuit of trying to get that bandage, you patch it up a little bit, you move away to get that bandage, right? And maybe the bandage doesn't do a whole lot, right? Maybe that bandage isn't enough to repair the hole and it gets infected, okay? If you don't take care of that infection, let's say you don't clean the infection, you don't take care of it, that infection could become a much bigger problem. That infection could leave you with potentially having to get surgery, right? Which is a much bigger problem. And then if you don't get surgery, maybe you have to remove the limb, right? It's so long gone, you may have to remove the limb. That's what first fair value gaps are. It's kind of like a butterfly effect. You're inefficient on a lower time frame. This inefficiency, in order to fill that inefficiency, seeks liquidity. So we have to go higher or lower depending on bullish or bearish first fair value gaps. Okay, so we're going to go higher or lower to fill this inefficiency. So that means we have to get liquidity. What if in the process of doing that, we don't have enough liquidity at that endpoint to continue, and we leave behind another bigger inefficiency. So the 1 becomes a 2. And then in doing this over and over, the 2 becomes a 3. And the 3 becomes a 4, right? And the 4 becomes a 5. This is the idea of first fair value gaps. They become more and more prominent. Now, when you have a market state that's reacting to the outermost FFVGs, that's consolidation, right? And I can show you this, what I mean by this. Let's find a range of consolidation and identify what we're kind of stuck between. I mean, this is a pretty decent example. Okay, we are consolidating, and you'll see we're not digging deep into the draw. We're staying pretty close on both ends. Here's the 5-minute FFVG, and there's going to be a lower time from FFVG closer in here that we're kind of stuck between. We're stuck between, pinging between, building out liquidity, right? The deeper you draw into the deepest most FFVG or the deepest most FFVGs, the stronger reaction you're probably going to see, because that's the lowest possible inefficiency you can get without sweeping out the liquidity. That's the idea. What the fuck did I just do? That's so cool. I didn't know I could do that. Let's go away. Oh, I got to pull that out on stream. God, I love America. Holy shit. I love fucking freedom. Oh my god, white monster. All I need is a Nina, bro. Holy shit. This and some top, bro. This top and some pointers. That's a good time, you know what I'm saying? That's all a brother needs in 2025. Anyways, this particular trade, okay? Very standard trade. Buy side sweep. This pointer, I did actually take this pointer. It broke structure in the pointer, so we got out of this trade and re-entered on the 5-minute pointer to the downside, and we targeted liquidity. This is just a standard move. Now, we want to teach this as the easiest way to learn time frame alignment is an easy example, and then we're going to go to the much more difficult example where we had problems, which is going to be a lot more educational. But where are our high-res highs and lows in this move to the downside? Assume that you already know how to take the entry, you already know how to take the trades. How do we identify which sweep was the one that's going to hold? Well, outline your high-res highs and lows. Here's a high-res low, high-res low, high-res low, high-res low, high-res low, high-res low. Then what you do is as you trade into those draws, you have to use both NQ and ES correlated at the same time. This is an update for EQ range, by the way. That's coming soon in the indicator that I'll be releasing, made by Flux Charts, and it's looking crazy, boys. Leak. Wait. I don't think it's enabled. Oh, yeah, I forgot. I have it disabled. Anyways, we're not leaking. Never mind, no leak. Sorry. Anyways, yeah, so we have to check NQ. We got to check ES. We got to see if there's SMTs between the two. What's ES doing? Does ES take any new lows? No, we've not swept any new high-res lows. The next high-res low we have is right here. The next high-res low is right here, 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 and here. We can check them on both. We have to constantly revert back to each one. Let's go back to NQ. Sell side sweep of liquidity. Do we assume move to the upside? The answer is no. Pointer breaking structure. You might even size back in on that right there. There we go. We're sweeping into new draws of liquidity. Any of these, you have to understand, any of these could be sufficient enough to cancel out the implied move. So how do we determine that? Well, you go to your lower time frame, and we see what does that sweep look like on a lower time frame. Well, take a look. This 1 minute draw didn't do anything. We clearly are trading against the draw. This draw doesn't do crap. This draw right here, probably not all that important, right? If we continue to trade towards it, we're good. We got to check NQ to see what's going on. Ultimately, when you would get out of the trade, think about it rationally. When would you get out of a short position? When a long entry presents itself. When would that happen? After a sweep, SMT, FFVG, pointer break off of new FFVGs. If we sweep, create new FFVGs, then a pointer, and have an SMT between both equities, brother, man, that's dance money. Happy sign, Bankington International. Book your tickets to Miami. We're spending it all on a hooker named Venetia. You know what I'm saying? That's what we doing. That's the type of timing we on in 2025 with a monster in hand. You know what I'm saying? So let's find that out. I want my little red thing back. How do I get that right there? Oh, we get the red boy. This is lit. Anyways, let's find out if these sweeps mean anything, right? Coming into our sweeps, big draw into liquidity. Let's check ES, see what ES is up to. ES is also pulling into our draws of liquidity as well. Obviously, in hindsight, you get to see where we exit this trade, and you'll understand the rationale behind it in real time. And you'll see we get right in after this, right? So we sweep out these draws, right? We sweep out the draw. Do we create a fair value gap break off of that draw? We have a break. Do we create a 1 minute inefficiency? The answer is no. We trade towards the draw continuously. Now let's check MNQ to see if we traded lower. NQ is still trading against this last draw. So these three draws are all proven to have nothing behind them. Otherwise, they would have been the sweep, then created 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. You would long be cooked if you waited for the 5 minute inefficiency. But that's when you want to get out. Pointer breaks after the low time frame inefficiencies forming off of a sweep. What about this draw down here? This is one of our last couple of draws. This is our London low draw. One of our big targets we'd probably be taking contracts off of. Do we see FFEGs being created? Coming back into our London draw, When you see this happen where it's getting really close, you want to keep toggling between the equities, and you'll see we take out this low. This low is not the London low. We've already taken our London low. It's just another high res low, and we're continuing to trade against our draw. I think I might have drawn the draw incorrectly, actually. I think I was wrong. There we go. Okay, we've now swept our draw. Did we create FFVGs away from the draw? Check the 1 minute time frame, no FFVG. 2 minute time frame, no FFVG. But we have a pointer, right? We're creating pointer breaks. Kind of just, I don't know, man. I'm not, you know what I'm saying? I'm not getting out for this. Okay, I'm on a weenie. Okay, some of y'all are weenies. You're like, nah, the trade's over. The trade is over. Notice, we've got an FFVG right here, a 1 minute, right? This is our first sign of inefficiency, meaning there's definitely liquidity here. Static liquidity. How do we know if something behind it? Buy side, sell side. How do we know the strength? Whether or not it creates FFVGs and then passes it up the time frame. Okay, that's how we know. It becomes more and more inefficient as time goes on. We don't have any other inefficiencies in here besides 43-minute time frame. What type of shit are we on? Nothing else to worry about. Okay, buy side sweep of liquidity. Do we see move to the downside? Kind of. We'll check ES to see what's going on here. Do we make any inefficiencies on ES? No, we did not. We were just chilling. Do we trade against the buy side sweep? The answer is no, kind of just chilling. Sell side sweep, do we move higher? The answer is no. We have now inverted the 1 minute. We've not made any other inefficiencies on any other time frame, I don't think. How do we trade against that? Just chopping. Sell side sweep, do we move higher? No. Buy side sweep, do we move lower? The answer is no. Buy side sweep, do we move lower? Yes. Do we create a fair value gap? The answer is no. Kind of just chopping at this area down here. So we're just chilling. There we go. Now we have a new draw. Okay, we've properly inverted this FFVG right there. So that failed. That FFVG had failed. Okay, we have a new draw of liquidity. So then we reset our brain. Low time frame. What do we see between our draws? Check ES. Did ES get a draw as well? Yes, ES also got a draw right here. That's our last draw, I think. There's one more down here. We might have to check, but ES took one last draw here. So we both have two new draws on both equities. We have to see, do they create and pass up FFVGs? Let's find out. Okay, sell side sweep into our draw. Do we create a break FFVG reaction? No, we trade with the draw. Do we trade within the draw range? Let's find out. We do. We're kind of just chopping around, just chilling at the draw. You'll see exactly where I got out in a moment. You'll see we start to have a little bit of a reaction. Check ES. ES is still trading against our draw. Sell side sweep. Do we move higher? No. There's your last draw into our FFVGs. Check NQ. Oh, what the fuck was that? I hate trading view. I hate trading view. There we go. There is our final draw before we really don't have anything past that. That was our final draw of liquidity that we've outlined. Does that create a 1 minute inefficiency? No. What about 2 minute inefficiency? Nothing yet. No reaction. The order blocks will form on your draw, right? And that's what we will trade to and from. And all these other ones we've been trading to, right? Sell side sweep, do we move higher? The answer is no. Sell side sweep, do we move higher? The answer is yes. Do we create a fair value gap on the 1? Yes. No, we do not. We want to check all of our time frames to see if it's getting passed up, if this inefficiency is traveling at all. It's not. We're not seeing this inefficiency traveling, but we are definitely respecting a draw. I wouldn't be getting out yet. I see the pointers forming against me at these draws. If there were FFVGs underneath of us, I might be trimming. But realistically, like it's just a waiting game for the inefficiencies. That's all I wait for. Because this could just be the pullback to move my stop lower to the high risk high that gets created, that then creates the inverse fair value gap that I can continue lower on, right? In this case, we see some pointers. If these pointers create FVGs, that's a problem. We're seeing a little bit of inefficiency, volume imbalance wise. We're easily able to fill those. We'll just continue to toggle between ES and NQ. Okay, here we go. So ES created FFVGs. This is actually where we got in on a trade. So when you're getting in on a trade that just is not related to the other trade, you'd obviously be getting out. We had a 1 minute FFVG form on ES, a 2 minute FFVG form on ES, no 3 minute, and a 4 minute break. I don't see any pointers in this range, but you'll notice, I think there was one actually. Hold on, was it the 6 minute? Here we go. We actually bring up the new topic of using time frame alignment with pointers. So notice we have a 1 minute inefficiency becoming a 2 minute inefficiency, right? In this draw, meaning we're seeing inefficiencies being passed up the time frames on the lower time frame. You'll notice we created a 6 minute pointer break. And you might be asking yourself, why would we ever take a pointer like this, right? Why would we ever take a pointer like this? We're sweeping new liquidity. Well, let's ask ourselves, what was this sweep at? The sweep was at 592.800. Hop to your lower time frame to see if we've already accessed this sweep. 598.200. Here it is. We haven't really had a reason to not take this, right? We swept and then continued higher, right? So realistically, this is a perfectly fine sweep to take, right? We've traded from the 592800 level back to the 598200 level. So taking that 6-minute pointer, that sweep doesn't do a whole lot, right? I'm fine with taking the sweep. Perfectly fine with that. Check MNQ to see what's up with MNQ. The same exact story. 6-minute pointer with a buy side sweep going higher. A lot of you wouldn't take that because, in fact, I wouldn't have taken this like multiple months ago. But we see that 6-minute pointer with a buy side sweep. Let's invalidate that sweep. Well, look, there's your high from that sweep, and we traded to the high. I'm fine with that. That means that we're chilling. There's nothing there that stop us. We're fine. Okay. We see, in fact, right here on the 3. The 3 looks terrifying, right? You see, it looks terrifying. But go to the lowest time frame you can and look at what's actually happening from a liquidity standpoint, right? We're not seeing the inefficiencies pass along we're not seeing them pass along on NQ at all, but we are seeing them pass along on ES, which is all that we need. The fact that we even have volume imbalances down here that aren't being filled at liquidity endpoints is telling you that we don't have enough liquidity to fill them. They want to be filled immediately, so that's enough of a reason anyways. Not to mention the FFEG in here on the lower time frame. Probably a 1 minute deep on this wick in here. In fact, we can even look for it. Look at that chat. I mean, come on. I'm fucking nasty with this shit. Holy fuck. I'm fucking nasty with this shit. Fucking nasty. Anyways, it's probably also on ES too. You get the idea here, okay? We can use these, pass them up the time frame, and we can invalidate those pointers that in the past I wouldn't have taken. So let's actually let this run a little bit because we have the same exact process we can go through using the low time frame invalidation method, okay? So where is our high-res liquidity on this move to the upside, okay? How can we use low time frames to check these high-res sources of liquidity? Well, let's identify our high-res sources of liquidity. High-res, and that's it. We'll go to NQ to see where our high reses are at. High res, and then high res, right? What would I be targeting on the move to the upside? At most, the most substantial draw, which would be the AM high. Okay, that's what I'd be targeting. Now, on the day, we are well above our previous daily high, I believe. Yeah, where was that at? Right here. So we're well above our previous daily high. So, really just trading to the nearest draw, to and from that nearest draw. Okay, I'm not really teaching the entry model, so this is just talking about if we have the entry model already presented itself, how can we use those lower time frames to understand what's behind those draws? Okay, so we can't really make decisions until we trade to the draw. There we go. So we moved into that liquidity level, that high-res liquidity. We buy-side swept. Take a look at the sweep. We buy-side sweep. Do we move lower? No, we do not. So there's nothing there to stop us. So we're chilling. There's no even any reason to look at anything. Let's watch what happens here. Continuing higher, check NQ, see have we traded any draws? No, we're chilling, right? We're just trading to our nearest draw. There's our sweep, our axis of liquidity. Buy side sweep into a draw of liquidity. Why did we get out on this trade here? Well, let's take a look. What do we see happen? Buy side sweep of liquidity. We see a move. Where was it? ES or NQ? Oh, it was NQ. Okay. NQ is coming up to a range of first fair value gaps in here. And what we see happening is we're respecting the draw seemingly on NQ without sweeping anything, right? That's the beginnings of an SMT. And you'll see as we get closer towards that take profit level that we had outlined, watch the sweep. There's the sweep. We see from the lower time frame, inefficiencies start to develop, right? The signs of reversal. Did they get passed up to the 2-minute time frame? No, nothing yet, but we see that buy side sweep getting more and more prominent as you scroll up the time frames. Now, we'll wait for those base inefficiencies to come in here. It might have just been EQ, actually. Don't actually remember all that much. Here it is. Okay, so there's your draw. There's your draw. Okay, look at low time frame. Watch what happens. We see the draw of liquidity create a 1-minute inefficiency. Right? 1-minute inefficiency. Does that pass up to the 2-minute time frame? No, it does not. We'll check the 3-minute time frame. Does it pass up to the 3-minute? Potentially, we have an inefficient break. Okay, we'll go to ES to see what ES is looking like. Does ES have FFEGs out of the sweep? Yes, we do. Or another inefficient break. So we're close to 1. We'll check the 1-minute time frame. We've got 1. We can see we have the beginnings of FFEGs. Now this day ends early, unfortunately. It ends in like an hour, so we won't. Did the camera die again? Why? What did I do? What did I do wrong? I don't know what I did wrong. Okay, do we create an inefficiency on the 2-minute time frame? Yes, we did. Do you see how it's being passed up the time frame, and we're validating the bearish fair value gaps, retracing and inversing bullish fair value gaps, as well as filling bullish volume imbalances and creating and maintaining bearish volume imbalances. Do we lock in the 3-minute inefficiency? Yes, we do. So at this point, you'd long be out of this trade, right? You see how the inefficiencies are passing up the time frames. Now, if there wasn't a huge gap in price between now and when the market's going to end, we would see an implied move down to our next draw of liquidity, which would be our AM low. But we have news, and you'll see what happens. Not news. We have a gap in price between 12 and 18. So this is implied moves don't really carry like this because it's kind of like the market opens, and even if you swept a low, when the market opens, new volume comes in, so you have to be careful. In fact, we dig deeper onto FFEGs on the New York AM high. Did we sweep it on ES or NQ? No, we just respected the draw. And then you'll see what happens. We trade right to our our AM low, that nearest draw of liquidity, and just check between all of them. And you see we trade right to that AM draw, right? And that was our most substantial draw of liquidity. Now let's go to the other trade that I've outlined here because it's another really good example of using these lower time frames to analyze draws. Okay, that's what we're going to do heading into this trade here. Give it a second. Oops. Okay, whoops. Here's the trade. So let's analyze how I got in, obviously, off of the SMT between the London sweep. We get in. What area of concern do we have, right? Our draws of liquidity up here. These are all draws of liquidity. Why did I get out here? Mainly because we started to see some passing up from the 1 minute to the 3 minute of inefficiencies. You don't need to know why I got in the trade. Okay, if you don't know why I got in the trade, go look at pointers. Now, we can analyze what this video is about, which is time frame alignment. We can analyze, here's the pointer I entered on. We're sweeping new liquidity at, let me delete these levels, my bad. We're sweeping new liquidity at 5939. So let's go to a lower time frame and disprove that liquidity means anything, right? That's how we can get in on these fake pointers that actually are still real. Where was the entry? 5-9. Dude, I fucking forget. The 65-minute? Holy shit. Where the fuck is the trade? Okay. We got in at 950 and we had the sweep at 5939. So 5950. We'll analyze this real quick. Oh, come on, bro. 5939, 950. So here is our entry. And where is the sweep? This is the sweep up into that high, right? This is the sweep that we had access to. And notice how we trade towards the sweep, right? You see how we move towards that sweep right there? It wasn't until we broke past that we could really do anything, right? We didn't have a negative reaction off that sweep. It wasn't anything too prominent. So we disproved that sweep means anything on any remote time frame, right? Look at where the sweep happened. It's not doing anything off the sweep. There's nothing we have to worry about. Here's the sweep. We trade towards the sweep. So there's nothing to worry about. You can enter on that pointer, right? You can fill positions on that pointer. That pointer is valid. You cannot just throw it away because it has a sweep. I used to do that, and I would disregard any pointers that would potentially create sweeps, and I was missing out on trades. Okay, but that sweep doesn't mean anything, right? How is it that we're going to sweep out liquidity and then trade towards that sweep? Especially after a sell side move like this, we continue to break structure, and inefficient breaking structure as well. It's important. So we get in on that pointer break. I believe it was on the 5 minute. I forget. Yeah, the 5 minute right here. We get in on that 5 minute pointer break. Matter of fact, there's actually another London move right here from a pointer higher, which we can analyze that as well if you guys. We're not sweeping any new liquidity, so we don't need to. But the only time it's okay to not analyze it is when you have a pointer like this that's sweeping the opposite end liquidity, because this is what you'd want to see. Sell side sweep, move higher. So that's perfectly fine. But when you have sweeps like this that access new liquidity, low time frame it, see what happens in lower time frame before you start scaling in. Okay. Now, where do we have to have concern on these trades? Higher is high, 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 London high. Okay, so let's zoom in on all these sweeps in the lower time frame and watch when I got out of this trade. You'll notice it's very characteristic. You'll see these inefficiencies get passed up the time frame. Let's go to where after the pointer got verified with our fair value gap, trading into our draw. Here are all of our available draws. Digging into our draws, no problem at all. All these draws are being taken out. We can actually delete them as we trade towards them. They don't mean anything. Oh, it's adding liquidity, but not substantially. Buy side sweep, do we move lower? The answer is no. We trade towards the draw contiguously. Still no inefficiencies. Starting to chop a little bit. This is where you'd also want to correlate with NQ to see what's going on in NQ's universe. Go back to yes. Do we create a 1 minute inefficiency here? The answer is yes. We create a 1 minute inefficiency. We'll go to the 2. Do we create a 2 minute inefficiency? No, so we're fine. We can continuously trade with and from the draws. Perfectly fine. This fucking camera. I'm too rich for this shit. Turn the fuck on. Come on. Oh my god, you're kidding me. I'm almost done with the video. I'm almost done. Lock in, please, little bro. Oh my god, you're fucking kidding me. Please. Oh my god, thankfully. Sorry, this is a fucking nightmare. Much better now. Okay, still trading into our draws. Draws aren't maintaining inefficiencies. They're not passing the inefficiencies along the time frame. Buy side sweep, point break higher. Digging into our draws, do we create a 1 minute efficiency? No, we do not. You gotta use all your time frames. It's not just gonna be a perfect 1, 2, 3, 4, 5 every single time. Let me fucking touch you. Thank you. Okay, it's not gonna be a perfect situation every single time where it's 1, 2, 3, 4, 5. It might be 1, then 3, then 4. If you see it passing up off of a high res sweep, that means something, bro. Like, what are we doing? Do we trade against the order block range off these sweeps? We seem to be doing that. Do we create any 1 minute efficiencies? No, we do not. Do we create any 2 minute efficiencies? Let's check ski. We have a 2 minute break. This fucking camera. What the fuck? Do we create a fair value gap? Yes, we do. Is there a 1 minute fair value gap? Yes, there is. Is there a 4 minute fair value gap? Potentially. Is there a 3 minute fair value gap? No. So we have some reason to trim in here. I'm trimming in here for sure. Do we lock in a 3 minute inefficiency in here or a 4 minute inefficiency? We do not. So I'm not trimming anymore. I trimmed one in there because we saw the 1 go to a 2, but not to the 3, and not to the 4, and not to the 5, I don't think. We'll check. No. So we continuously check on all of our time frames. Do we pass it up? No. In fact, we have a reason to move our stop to that high res source liquidity, right? Do we have a 1 minute efficiency in here? Yes, we do. Here's your 1 minute FFEG. Do we have a 2 minute FFEG? A new one? No, we do not. Do we have a 3 minute yet? No, we do not. Starting to see a little bit of some weird reactions here. Buy side sweep, do we move lower? The answer is no. That fair value gap is not holding, so we're doing just fine. Okay, probably doing some trim work like I told you. Go back to our 1 minute, check for new 1 minutes, right? We need a new 1 minute. Buy side sweep off of the draw. Nothing yet. There's another 1 minute that formed in there. Didn't work. Here's another draw. There's the draw. Did we see the passive of time frames? Oh, I see what we did in here. I completely fucking forgot. Okay, so we had actually trimmed, I believe, the last bit of our contracts in here, so I'm just being intellectually consistent. We targeted the London high. That was as far as we had actually taken this trade, and we had gotten out most of our contracts because we saw the 1 pass up to the 2. So when I said we're going to do some trim work in here, that's what I mean. We had just taken it to that high because we were running out of time in the call, so we had only taken to the high there. But realistically, in a real-life situation where you're actually trading, what you'd want to do is just take it until you have the 1 to the 2, to the 3, to the 4, or any amount of time frame translation, that time frame alignment, right? Aligning the time frame higher, showing that the inefficiencies are traveling up. Then when you get a pointer against that, that's when you would get out. So the only reason you'd ever get out of trade like this is if you buy side sweep that liquidity and then you see the opposite move happen. I think we end up having this happen up here, so we'll just let it play out until that ends up happening. Yeah, you'll see it was perfectly fine until we get our new draw. Let's find out where this happened, right? We see this entire new move. I think we actually took this too. Yeah, we actually took this move up here. I didn't know it would do that. Oh, that's cool. Thank you for joining the troop. Okay, up here, we have a new draw of liquidity. Probably FFEGs. I don't remember. I don't feel like fucking going there. You're not trying to learn how to trade for me, okay? Take a look. Buy side sweep. What do we see happen? We see these weird FFEGs form. The only time where we see a move to the downside out of this entire run was when we have the 1 turn to the 2, turn to the 3, turn to the 4, turn to the 5. That's when we could take this trade. Now, this particular trade, we entered on this point and it looks perfectly fine. No reason to check the sweeps on that one. But you'll see, where did we do our trim work? We understand why we took the trade. The 1 turned to the 2, turned to the 3, turned to the 4. You see them all right here, and we see a point break away from that. Then we just target our nearest draw. Draw. We got out on this draw. Why? Because we started to see some FFEGs. Okay, we we didn't get out in here. We got out around here. We started to see some FFEGs off of our draw, FFEGs, point breaking away from that. Let's find the pointer that broke away from that. Oh, here it is. You see what I mean, guys? You have to scale your time frames. You have to align your time frames. Do not get out. Do not check the sweeps and just trust the sweep on the 5 minute. Find out for yourself what is behind that sweep. It is that simple, guys. You're welcome for the sauce. Why the fuck do I do this for free, bro? Holy shit. All right, I'm going to get drunk.